Morning, everybody. This is Ryland Textor with the opening grain and livestock comments. Some sad news to start off with. Early on, the CME announced that the open outcry pits for futures will be closing on July 2nd of this year, and some sad news. So options pits will still remain open for the time being, but right now the futures are certainly going to close, and I think everybody really saw this coming, and that it was definitely an inevitability here, but nostalgia is already kicking in. So at this point, sad day, but we saw it coming. Otherwise, start off here, and the grain markets look to be rallying pretty strongly. On the open here, look to be correcting after yesterday's break, and we're seeing some fun buying early on. And right now, corn is about 3 to 5 higher, beans are about 8 to 9 higher, meal 1 higher, wheat 5 to 6 higher, and so we're seeing definitely some fun buying ahead of the export sales that'll be released later this morning. So at this point, I think demand concerns are a little shaky here, just with Argentinian and South American crops still pretty big, and U.S. domestic supplies big in the corn. So there still is definitely a more bearish perspective on the grain markets overall, but it seems like we're getting an opportunity to get some selling at higher prices earlier this morning. In terms of the cattle, hogs, and the feeders, we saw a pretty deep, sharp break yesterday, and we closed at 5-year lows in the hog market. Cattle market closed triple-digit losses, and the feeder market closed with triple-digit losses as well. We're still seeing oversupplies in the hog market, and to really keep pressure, as well as the port slowdown situation in the West, also keeping pressure on the market. This news is factored in. We are deeply oversold in the hogs. Meat prices were lower yesterday. Cash prices are still a little bit weak, so there still could be more downside to come here, yet the oversold conditions may influence a bounce higher. In terms of the cattle, sharply lower close yesterday, and it looks like we saw a pretty aggressive amount of liquidation on that break. They're still trading very sensitive to outside markets, especially breaks in the hogs, and in terms of the outside market influence with the strength in the U.S. dollar. The higher U.S. dollar is still a big factor in terms of all the commodity markets and the livestock and the ags right now, and any gains are seen as mainly a bearish factor at this point. So as of right now, the ECB looks to be not accepting Greek government bonds as collateral, so there seems to be sending a little bit of a shockwave through currency markets and the stock market as well. So in terms of commodities, we are still seeing the U.S. dollar, stock market, and crude oil prices still having a huge influence right now in the overall direction. So with that being said, these are my opinions, and they are not of ADM or ADMIS. And have a prosperous day of trading, everybody.